What is happening to YouTube? My name is Matt Faircloth. My company is called the DeRosa Group, and we are a real estate investing company, but we want to teach you guys how to do that too. This is called Mentorship Monday. What people do here on Mentorship Monday is they email their questions to a easy to remember email address. It is helpme@DeRosaGroup.com. That is helpme@DeRosaGroup.com. We go through those questions and we take them. We have you guys here live on our Mentorship Monday program, and we answer your questions. Justin and I will chat with you guys and answer your real estate questions and talk some real estate shop. There is no better way to get your questions answered, to pick brains, and to get stuff answered live. But I want to see you guys in here too, because we want to help more people. So email helpme@DeRosaGroup.com to get on the show live. So I could not make this happen without my co-host Justin Fraser. Come on in, Justin. How are you today, brother?
Hey, doing well. How are you doing, Matt?
I'm doing awesome, man. Awesome. Well, how you doing today? What are you up to? What did you just wrap up?
Speaking of Mentorship Monday, you and I were in the car the other day. My brother called, and he was talking about, he's looking for a duplex, this and that. And you were like, Hey, go look at New Brunswick. Now we just did the home inspection in New Brunswick. I mean, I think it was 2 weeks. And he got under contract, and here we are doing a home inspection already. So
I think we were on a call with him, and I was like, "Well, I see you in New Brunswick, Jordan," because he's a young urbanite, like guy that could get millennial dude that would handle a nice little city like that. So I'm super grateful I was able to help, and I think he's gonna do really well in New Brunswick because you've got the college scene there, and that is a good tip. Unsolicited Mentorship Monday advice: if you guys want to live in a house hack like Justin's brother's doing, you can buy into a market where there's a collegiate environment where you're not going to be having maybe like crazy kids having parties in your rental, but you can have grad students or kids that have, college students that have their head together, and you will have a deep pool of renters that can always step into your rental, and you can live there. And in college communities tend to have, like if you're younger, they tend to have places you can go out. They have restaurants, they have all kinds of scenes. They have probably lots of outdoor venues and things like that. They're probably like New Brunswick's very close to mass transit. A lot of great reasons why college towns are great places to invest, to live, but also a house hack. So I'm really excited for Jordan getting into that.
Me too. Yeah. And the inspection went well. So
hopefully
he'll be buying this in cash loan pretty soon. We're excited.
Good to hear it, man. Good to hear it. Justin, who we got lined up today? Let's bring him on.
Oh, man. Today, let's go. Seth Bryan on his way in.
Cool.
What's up, guys?
What's going on, Seth? How are you today, man?
I'm perfect. Yeah.
Perfect. I'm perfect too, man.
Perfect.
We're all perfect, whether we know it or not.
Yeah.
Cool.
Amen. I've been investing for about a year. Basically, I'm tapped out with my own personal money. Basically, my question is, does it make sense to raise private capital, pay, 6-12%, and not be able to refi out of it in a year?
Okay. What is so great question. I can't help but mention, you talk about raising capital and all that kind of stuff. So if you want to learn more to do that, I got a book.
It's on the way.
It's on the way? Good. Okay,
I got
good
it.
stuff. And if you want it signed, I'm not too far away. I'll gladly take care of that for you. I'm really grateful that you picked that up. So thank you for that. What kind of deals are we doing here, Seth? Are we doing flips? Are we doing buy and hold rentals?
So mostly buy and hold rentals.
Okay. Got it. Mm-hmm. You want to buy and hold rental. Is this your full-time job?
No, it's not.
Okay, got it.
Landscaping, construction, and then all real estate on the side.
Okay, got it.
Yeah.
Got it. Are you bankable?
That's the thing right now. Like, I kind of tapped out personally. I bought my first one, and in order to grow, do the BRRRR, kind of what they talk about in bigger pipes, using OPM, trying to, make it work, factor that into the deal,
Okay, got it. So you're buying in your own personal, the stuff you have is in your own personal name right now, right?
I have my first single family under an LLC.
Okay, got it. First move is you've got more going on than you should be having anything else in your own name anymore. Where the construction company is liability. There's also some minor liabilities with a landscaping firm as well. You got to separate your personal self and your other business ventures from your real estate assets. So your landscaping company should be in an LLC or some sort of corporate structure. Your construction company, if it's its own company or whatever it is, if it's landscaping and construction together, then you can do it under one LLC. But it's just if it's a completely different initiative, then it should be under its own LLC, and the real estate should be under a different LLC, right?
Yep.
For a multitude of reasons, for tax reasons, liability, everything like that. Okay. If you do the right deals, you should be able to move forward with private capital. So you should be able to buy yourself a beater in a rental neighborhood, that like a really, really beat up property, needs a bunch of work, especially, not for nothing. You're in construction, I mean, you should be able to get a team together to rebuild these properties at half the cost of what it would cost somebody like me and Justin to do the deal, right?
Exactly.
Huge asset to you. I would only do, given your construction contacts and the Rolodex you've got for construction, whether you want to do all the work yourself or whether you want to bring in a crew or bring in teams or whatever, you should be doing only BRRRR strategy deals because of the cost that you can get work done at. I'm not joking. I believe you and Justin, you could get work done for probably half of what it would cost me and Justin to get work done. So you should be doing BRRRR strategy deals. Buy a beat up property, auctions, foreclosure.com, Zoom.com, fix it up, refinance it. And then once you get a big enough pipeline of that going on, what I did when I was getting going was I would buy a swath of properties, buy like say 5 or 6 units, and then refinance that package as a package deal. Now you gotta have enough private loans lined up to finance the acquisition and construction on 4 to 5 deals, right? Once you can do that, you're off to the races. And each of those package of properties could make you several thousand a month in passive income. And that, so you just do that again and again and again. And before you know it, you've got a significant income coming from the real estate. So I would only do BRRRR, and you can do BRRRR all day long with private capital. Justin, what do you think?
Yes, to all of that.
What Matt
the only thing I would add is don't be afraid of 10% money, 12% money, hard money even, if you have a plan to get out of it, right? So if you can take that loan, call it a hard money loan even, doesn't even have to be private necessarily, or private money, and show a plan of, I'm going to come in, it's going to take me 3 months, I'm going to renovate this thing, and then it'll be rented out, and this is what it's going to rent for, and this is what I'm going to be able to refinance it for, then you'll be better off. And that the expensive money isn't going to matter so much because it's only going to be a few months. Call it 6 months, maybe even when your numbers model it on 9 or 12 months, that's okay. But the plan is to get out of it, and so it doesn't really matter that much if you actually run the numbers, whether it's 6% or 12%. You're only talking about a few months, so it's not really
on a short investment like that. You're only talking, if you're borrowing like $100,000 at 12%, that's $1,000 a month. If you're borrowing at 6%, that's $500 a month, which sounds like a lot of money. But if it's only a 3 to 6 month loan, a couple of grand one way or another is not going to kill your deal. And I would go over. I would choose to lose a couple of grand in interest on a deal, to have a deal that you can grow and expand into, but also so that you can scale and get to a point where you're doing. You should, maybe have 3 to 4 of these or more going on at any given time. There's no reason why you can't you already built business systems around your landscaping and your construction company. You should be able to build business systems around your construction and your rehab and BRRRR business. So are you going to self-manage?
Yes.
Okay, good stuff. Are you using, do you have in-house financials right now, like in-house bookkeeping, in-house, bill sending to folks that you do work for now?
It's a family business. So, my dad's doing the billing.
No, I totally get it. But I have friends that have this kind of thing going on, and what you end up doing is you end up having the folks that do the billing, invoicing, bookkeeping for the business side of things, for the construction business and for the landscaping company. You ended up having to set them up to do the bookkeeping and landscaping and even rent collection for your rental property. So you kind of already have an admin house set up. Yep. And my hope is you can tap that and use that admin structure that you've already built, be that QuickBooks, whatever, to run the book side and run the financial side of your company.
My wife actually runs a wedding venue in Bucks County. Okay. She runs the books for them. So we got it in house. Yeah.
So you're married into smart people. Yep. I love it. Cool. Nice.
Yeah.
The BRRRR method is a 2-step process. You're going to buy it, renovate it, and then you're going to rent it out, and then you're going to refinance it. That refinance part is where you're going to bring in a bank loan and take out that expensive private money and replace it with cheap bank money, right?
Yep.
So what Seth is going to do is he's going to use private money, hard money, expensive money to go and do his acquisitions and his construction, build that portfolio, get it humming along, get it healthy, increase its value, and then pull all that money out with a refi. And then he's going to repeat, do it over and over and over and over and over and over and over again. Take his little snowball of money and just cycle it over and build himself thousands and thousands of units here in lovely Bucks County, Pennsylvania.
That's the plan.
By using the BRRRR strategy over and over and over again. So cool. Will, I hope that helps.
Justin.
Appreciate you joining us.
Yeah,
awesome.
Pleasure. Thanks a lot.
What I got from today is the power of private capital and how to scale up a BRRRR business when you can't pull any more on your personal credit. Just how to scale up when you can't, when you can't borrow any more money, when your personal credit won't let you borrow anymore. How do you keep scaling your real estate business? So
don't be afraid of it. Don't be afraid to pay and get the deal done and have a plan to get out of it.
Yeah, well, it's another how to make expensive private money and hard money work for you. Like how can you build a multi-million-dollar portfolio using hard money and private money? That's a really good conversation. And you got to just treat that money like it's a hot potato. You get in, you hold it, and then you hold it for as long as you need to, and then you quickly drop it off. Get into cheaper money as soon as you can. What I think we need to do is just to remind you guys one more time to pop us an email to help me at DeRosaGroup.com. Will James, you're commenting. I want to see you, man. Come join us. Come join me and Justin live. Let's say hi to you live here on the Mentorship Monday program. Well, Justin, thank you for being here. Will, Nabil, and of course to Seth, thank you guys for being a part of the program. Have a great profitable week.